Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets? Well, we're having a little bit of a bounce. Not much though, really. Dow's up about 70 points. Nasdaq's up about 80 points. That's not a very big bounce for that big drop we had yesterday. Now, this month of September, we talked about it. It's going to be volatile, but we're really going nowhere fast. We're right back where we started the month at. We've been down, we've been up, we've been down, up. We've been cutting through this 50-day. We're slicing back and forth, back and forth. And that's a really tough market to make money, and a lot of traders don't like that because the market's not really trending in one direction or the other. It's choppy and it's beating them up on both sides. Okay, so we were at 430 on the SPY, right? We dropped down to 390. Then we had that rally up to 410, a 50% retracement. And then we had that inflation number come out, and wow, that dropped us back below the 50-day again. We're down at 395. Now, I do think that we probably get a bounce later today or tomorrow that will bring us back up to that 50-day moving average. But that 50-day moving average is a battleground. Right now, that 50-day moving average acts as resistance because we're below it. And if we stay below it, well, that's a problem because let's say we go back and take out the 390 level, right? If we take out the 390 level, we'll probably go back to the June lows, retest those lows, which are down at 360. And if we go down that low, we'll probably get down to the 200 week, which is at 350. Now, I'm not saying we can't bounce above this 50-day again and start to move upward, but right now it's looking a little bit scary to the downside. Yes, I do believe we'll get a bounce either later today or tomorrow. That'll pull us back towards the 50-day moving average. 50-day moving average acts as a magnet right now, but there's a big gap that we just gapped down yesterday, and we got to come back up and we got to fill that gap. Now, what caused that big drop yesterday was the inflation numbers. They were terrible. I mean, inflation didn't go away, it went back up, right? Well, at least we got that Inflation Reduction Act coming. That'll solve the problem and fix everything, won't it? Well, yeah, I'm probably joking. Let's move over to the real estate market. All right, so the real estate market is just, it's getting slammed right now. A lot of people don't understand this, but right now mortgages, they're above 6%, above 6%, and that's if you have an 800 credit score. You don't have that 800 credit score, you're paying close to 7% already. And I think once the Fed raises interest rates next week, we're going to see that 7%. And this time next year, I still say it will probably be over 10% on the mortgage rates. And that's just going to crush the housing market. But right now, the housing market has two problems, not just one problem. It's got two problems. The problems are no one can afford their mortgage and no one can afford the rent. Rents are too unaffordable and houses to buy are too unaffordable. It's kind of a double whammy, and both of these are going to come down. That's my prediction. Now, of course, not in your area. In your area, houses only go up. Rents probably go up in your area also. But I'm telling you, the market's in trouble right now because it's getting slammed by this interest rate. Look, it's 6% mortgage. You realize the last time we had 6% mortgages, you would have to go back to 2008. And what happened in 2008? Well, that was the housing market crash. And you know what? It is different this time. In 2008, we didn't have that big inflation problem. Now, I don't think that Inflation Reduction Act's going to do a thing to inflation. We have this problem, and it's not going away. They're going to keep raising interest rates to try to get this to go away. Look, we're at what, 2.25? We're going to be at 3% when Powell raises next week. So it's 3%. They want to get them up to 4%, but they want to hold them there for a year. Good luck with that, because that's going to send the markets come tumbling down. But what the real problem was, and the real problem that we got ourselves into this mess, was basically trying to manipulate the housing market. How did they do this? Well, the Federal Reserve, they held interest rates at 0%, right? 0%. And okay, that's going to prop up housing a little bit. And when it was 0%, what'd they do? Well, they gave corporations like BlackRock, Blackstone, here's money, free money, just go out there and buy houses. And they did. They went out there and they bought houses. They bought houses. Well, right now, they're not buying houses anymore. They've stopped buying houses. What are they doing? Well, they're selling houses. They want to get out right now. Look at, because interest rates are going up. Now, they even have to pay 3% 3% for money. Me and you, we got to pay 6% plus for money. But okay, so they kept the rates at 0% for this whole time from 2008 till now, 14 years, right? 0%. And all of a sudden, we got a problem. But you see, here's what else caused that problem. They have been buying these mortgages. They've been buying mortgages since that 2009. They've been buying them. And they own $3 trillion with the T of mortgages. The Federal Reserve does. That's how many they bought to prop up, to manipulate this market. This is terrible because what's going to happen is you're going to crash the housing market. Look, this is unsustainable. It's unsustainable. You cannot print trillions and trillions of dollars a year. Look, in 2009, they printed $3.6 trillion with the mandate to get the housing market up. And oh, it worked. It did wonders. Look at the prices. They're outrageous right now. But look in the last 2 years, we printed $6 trillion, right? That's just in the last 2 years. This is not sustainable. I don't care if you go print 10 trillion this year, 20 trillion next year. At some point, it's no longer sustainable. People cannot afford to buy a house. That's why house prices are going to come down. Probably not in your area, but they're going to come down. Look, people cannot afford rent. Where I am, a one-bedroom apartment's renting for over $2,000 a month. People can't afford that. And right now, you're getting, the rents are going to be coming down. House prices are going to be coming down. Now, when I say a crash, it's going to take time to play out. House doesn't crash like the stock market. Stock market can crash, right? Can crash really hard. Housing market's going to crash also, but it's going to take 18 months to 2 years before we see the bottom. Look at 2023 is going to be a terrible year for the housing market. We're probably not going to bottom out till 2024. But right now we got a problem. We got a problem because homes are unaffordable. No one can afford to buy. We got all these new homes being built. They can't get them sold. They're just sitting there, and it's a problem. But you also got rents. Rents are unaffordable. So where are people going? Well, they're moving back home. They're moving in with roommates. Car camping. Car camping is going to be, I'm telling you, it's the trend right now. Just put in on YouTube, car camping. You'll see these people that camp out in their car. That's their home. And these YouTubers, man, they get a lot of views. They get a lot of views because people are interested in, because they may be the next car camper because they can't afford their mortgages. So we're going to get these foreclosures coming, right? Foreclosures are going to start. Look at talking about mortgages. Mortgage applications are the lowest they've been in 25 years. 25 years, mortgage applications have never been this low. Look at the mortgage companies. They're getting destroyed. Companies like Rocket Mortgage, that's down 80%, right? Okay, I mean, Wells Fargo, they're shrinking their mortgage division. They don't want to make loans because they don't want to be the ones holding the bag. But this unaffordability thing is a problem. Foreclosures are going to start. Now, why are foreclosures going to start? Well, because the recession's here. Look, they can say we're not in a recession, which I do find funny. Look at households lost $6 trillion of wealth just in the second quarter. But no, we're not in a recession. In my opinion, we're headed towards a depression. But you're never going to get them to say that word. They're going to just use the word, we're in a severe recession. That's what they're going to be saying. But that's still 6 months away for them to even admit that we're in this recession. Believe me, these are not good times for the housing market. There are people that just bought this year, just bought houses this year. They put 10% down, 20% down. They're already underwater. They can't sell the house and get out with anywhere close to the money they paid for it, and they probably lost most of their equity. People don't understand how quickly equity can get wiped out. It can get wiped out really quick. People are going out right now and they're getting these HELOCs, home equity line of credits, right? Don't do it. I'm telling you, unless you're desperate. These are desperate. You see, they used to refinance, and that's what they've been doing for the last 12, 14 years is refinancing their house, using their house as the ATM machine so that they could live this high lifestyle. Well, this high lifestyle has come to an end when the mortgages went from 3% to 6% because they can't refinance now. So they have to get these HELOC loans. These HELOC loans are adjustable rates, and these will burn you because, look, you're tapping into your equity, right? And your equity is going down. Every month it's going down. It's going down. It's going down. And it's not going to be rebounding anytime soon. Look, this is going to take time to play out. It's going to take 18, maybe 24 months before we see the bottom. And then it's time to buy. That's the opportunity. Opportunity's not here. This is the first inning. We're just getting started. I mean, sit back, grab the popcorn. This show is going to get ugly. It's going to be a horror movie that we're watching. And it is just, maybe I'm being too negative for a Wednesday. I don't know. I think I'm being real here. I've seen this movie. I know how it plays out. Look, there's a lot of changes going on in the housing market right now. A lot of changes. And these changes are not in the upward direction. They're in the downward decline. They were circling the drain. I'm telling you, 50% off is going to be conservative. Now, I know not in your area. In your area, will probably go up 50% in the next year or two. But I'm telling you, it's scary. It's scary out there. If you like this stuff, give me the thumbs up. Why not? Why not? I'm Tall Mike. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.